Good morning, traders. It is Wednesday, October 15, 2014, 8:02 a.m. Chicago time. Apologize for the delay. It seemed like Google Hangouts was backed up and took a while to start. Let's dig into the day here. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. A couple of news items overnight. Mainly the president, the prime minister of Germany, has told lawmakers that Germany will not raise its public spending to stimulate the economy. Also, the Fed discount minutes showed that Kansas, Philly, and Dallas again looked for a hike to 1%. Directors generally expected moderate growth and continued slack. China's September CPI was below expectations at 1.6 versus 1.7%. And the White House will speak today with the UK, France, Germany, and Italy about IS, Ebola, and Ukraine. We're going to look for that. German Bund prints new record low yields, record high in the December Bund contract. You might want to look at what's happening over there. And then and on the back of here, the economic releases that came out about 34 minutes ago. U.S. PPI final demand comes in at negative 0.1 versus plus 0.1 expected, so worse. Advanced retail sales comes in at negative 0.3% versus expected negative 0.1%, also worse. U.S. Empire manufacturing comes in at 6.17 versus 20.25 expected, a lot worse. So it's interesting because it seems like the flow of negative news is precipitous. It's really coming in strong, and the market's sliding. Let's go over the expectations for today as far as economic releases. We're looking for business inventories at 9 Central. The expectation is 0.4%. At 1 o'clock Central, U.S. monthly budget statement expecting 86 billion. And then after the close at 3:35, we have API crude oil inventories. We'll take a look at crude oil as well, crude oil chart as well. Interesting things there. As far as speakers, 10:30 Central, ECB's chief Nui speaks in Frankfurt. At 1 o'clock, Bank of England's Wheel. Soft Hawk speaks about benchmark rate. And then at 1 o'clock, those of you who trade the euro or a pair that includes the euro, ECB's Draghi speaks in Frankfurt at 1 o'clock. As far as auctions, 10:30, we're looking for a 1-month T-bill auction. At 10:30 as well, we're looking for a 12-month T-bill, $25 billion auction. We have quite a few earnings releases as well to be expected. I believe Bank of America announced this morning they were off, and it's interesting looking at what they announced. Well, they came in with 42 cents EPS versus 32 expected, but they also say that they took an additional one-time charge for legal, for some legal concern. It seems like they're taking a one-time charge every quarter, but the banks came in pretty healthy so far. So, but we still continue to sell off. Hopefully, it's not a sign of things to come. Let's take a look at the technical picture here. Let's start out with the overnight. So yesterday we pushed. So this here represents Monday's trading. This is This is Tuesday's overnight session. This is Tuesday's day session. And then this is Wednesday's overnight session. And you could see here that Monday, even though it was Columbus Day, banks and the treasurers are closed, we had a strong sell-off that we talked about yesterday. And I had said that I was looking for a lower low coming in, and it did that over the overnight session. We end up revisiting that low on in the day session, but we have what looks like a weak low, 65 against 65. The market actually pushed all the way to 92 and came all the way back. Gives us a weak low. Much easier to see that in the NQ, where the NQ put in a low on Monday, pushed all the way back up to 85, and then made a lower low, and then did the same thing basically yesterday, where it took out the low, went all the way up to 52, and came back and made a lower low, making these continuously lows, even though the volume tapers at the low. The fact that the market's coming back to auction prices at the low is a concern, because if the prices at the low are unfair to cause this sort of a pop, then we don't expect prices to come back and revisit. We had a little bit of strength on the close. We had Intel coming out at 3 o'clock or 3:15 yesterday. I believe it was 3 o'clock, and they beat, and the market kind of drifted up. We had a small boost on the NASDAQ. In fact, I posted it yesterday. It's a pretty good chunk of the NASDAQ, and we had a nice little pop on the close here. The number came out in this area. So it had some support, but overall, I felt strongly that, or I could see that there's evidence that we are looking lower, and it did so overnight. So with the BOA release and some other things happening at this time, the market sold off and is not able to get off the bottom. The point of control is at the low. So this dark pink line here is the most traded price of the session, with a nice clear cutoff at 65.50. So I'm going to be watching the 65.50 for the session very, very closely. You can see here a pullback back to the VWAP, almost to the mid, strong sell, pullback almost to the 65.50 area at 64.75, and then a continuation push, and we're not able to get off the bottom. So 65.50, 65 quarter is going to be the over-under line for the morning session coming in. Pretty strong selling continues. I'm starting to become a little more concerned about the selling in that it is looking more systemic. It's looking more like it's widespread rather than just a simple pullback. Let's look at crude for a second. Crude is hitting. This is a crude daily. It looks the way it does here on this chart because I have intraday levels on there that have not removed. But I'm pulling crude back to the low of 628 2012 as the most recent low we've had. We've pushed all the way up to 104.96, and this product, I talked about it in one of the Stage 5 webinars, that I was looking for 8105 as a test area, and we just hit that. It took a while, but we just hit that this morning. And it's interesting because it's just not able to find any support at all. I mean, a product trades lower to attract buyers. This is what it's trying to do. So we've had these gaps. So if we look at, so we've had balance here, pretty good balance on a bunch of stuff, ISIS in Iraq, and the involvement of the U.S. in that conflict gave us a little pop. We had this balance, and then we kind of fall below. So we gap below, and push back into the balance. And then what happens is as we start to break lower, and this is a pit session only chart, we gap below and we try but are unable to hold on to higher prices. Here's a gap lower, gap lower, gap lower. This is right on the edge. It just cannot hold on to better prices. Here's another gap, a lower opening at 80.55 at the low. This is the pit. Again, this is pit only, and we're pushing up against the 81.05. Leaves us with very little volume, as you can see here on the composite. If I widen this composite, you'll see that there's very little volume under 81.05. There's very little here, so I'm forced to go back and pull in more data from the past. So let's go to 0101.11 to look at what's happening below that on crude. And so I go back to the beginning of 2011, and I still have very little to go on. So the next level down would be 79.48. Essentially, the way crude's responding is it's responding to lower demand and supply being steady as the Saudis and OPEC disagree on having some supply controls, and I think that's not going to change in the near future. I think that there's a competitive war going on out there between the suppliers of crude, especially with U.S. shale coming into play. I think they're making it painful for those who are attempting to enter this market, leaving prices cheaper. So when I look at gold, I look at crude, I look at some general fundamental products, I see weakness across the board, and the only thing holding steady or holding its prices are the treasuries. As we talked about, the Bund making new all-time highs. Look at this move overnight. So we've made highs in the recent past, but this is very, very strong here. Yields continue to make new lows on the 10-year Bund, and it's just tremendous, the level of participation here. This was the last high here, 50.78. We attempted this high, made a weak high at 50.76, just 2 ticks, and we took that out yesterday, and then today we have a small gap lower, and zoom it goes, very, very strong. So I feel like the selling, my point with this is that the selling has not abated yet, and I don't see any signs that there's support anywhere except in the Russell. Russell is holding on. So as we talk weakness and we see bearish commentary and so on, I'm seeing that the small caps are actually hanging in there. So as we sell off, here's Monday, which was a long tail sell-off here at an extreme low close, and then so in relative terms, the Russell is expected to be down here, closing down here on Monday, expected to open up here on Tuesday, trade down a little bit, push up, and then come back down to where it started. So around the 10.15, 10.20, and here it is way up here. So this and the treasuries seem to be giving me a sense that, not a sense, but an idea that there is some divergence going on and there may be support coming. But overall, seeing some strong breadth on this right now. Here's the dollar. Strong movement down in the dollar here, big move down. So that's on the release from this morning, on the PPI release from this morning. It's responding to that. It continues to make lows. Of course, on an inverse relationship, here's the euro climbing back up from the 126 handle. Anyway, overall, The overnight session continues to push against the lows here. It continues to camp out near the bottom. The overnight low is vulnerable. Yesterday was expected to be a rest day. This is kind of rest day action. We did not have a trend day yesterday. It's still very volatile. The swings are pretty wide. So you still have to manage your risk while compensating for the added volatility. It's a great time for those who trade with a 6-tick stop to bleed to death, basically just getting small cuts everywhere because the stop's so tight. So it's a little tougher for smaller accounts to trade this, especially given the leverage that exists in futures. But overall, this is a rest day. Today is expected to gap down, and I'm expecting responsive buying today. The next support was 1850. Look at that 1850. It comes from a very wide balance zone that we experienced. I talked about yesterday from mid-February till the end of May. This is the gap that we had between 84 and 86.50. Between these two bars here, the market was imbalanced, and it gapped up and moved into the next balance zone. This is expected to be here. And 1850 is the most valuable price below. I expect the market to chop around here. 62.50 and 61, which we did not today, but we kind of blew through on the overnight session here, in no respect to that at all. We're expected to be pretty decent support, but at this point, the market's through it on the overnight session. So I'm looking for a break of the overnight low, a test through, and then I'm looking for responsive buying back into that. Remember, the 65.50 area is the over-under line, is this key low volume node on the overnight session. The overnight range is pretty wide. Volume is very high. It's about 3 times as high normal. So I'm expecting some pretty volatile action on the close with this. So that's the key trade idea. Looking for a test of the overnight high, a break, and then I'm looking for it to find support and turn higher as the dollar drops. I expect the treasuries to cool off a little bit on the open. I know they're pushing highs now, but I expect that to reverse a little bit on the open. So that's the primary trade idea. I know I'm talking a lot. There's a lot going on here. This is what we are always preparing for, this sort of correction, this sort of movement. We want this volatility to continue, even though it's scary to some people. Here's the VIX. The VIX has topped out at about 21 to 22 in the past. We're well above that, 24. We've very often pulled right back once we hit that 21, 22 area and moved into calmer waters. But here, the VIX is hanging tight to its gains. Let's pull that over. The VIX is hanging tight to its gains and is holding steady above 24. So this is a reflection of the action that's going on in options and the insurance that folks are buying in anticipation of further lows. Okay. So that's all I had for you for today. I can go over the second hypothesis, which is a quick test up. The expectations for a quick test up, and I expect initiative sellers to step back in and push it through. If it does push through, I'm relying on composite from February to guide the way. So the next area down would be this 1840 CLVN, and then also down here at 1830 is key. I expect 1830 to be the extended target below 1830, 1840 are the key areas below us. Right here, these cutoffs, 1830, 1840. But I expect that to be a secondary hypothesis. The primary, break the overnight high on the open and find responsive buying towards 64, 50, 65 early on, and then we'll see what happens from there. Good luck today. Please, please, please do not put a trade on without risk. Even if it's not some price, it's a dollar amount or a number of ticks, preferably no dollars involved. But please don't go out there and wait and wait and wait. Put on a trade and just hang on for dear life with no stop in place, or at least not a mental stop. What happens when you do that, and I was going to post a meme on this yesterday, what happens when you do that is you're waiting to be sure that the market's going to go in your direction. If you're sure, you don't need a stop. Why do you need a stop if you're sure of something? If you do that, then you're not going to take your loss when it comes, because there's a fake level of conviction on the trade, and you're not obeying what the market is telling you. So don't go there and gamble. I mean, it's your money, but I really, the whole point of me starting this brokerage and so on is that or being involved with a brokerage is that I want to exercise the same level of risk control on our traders' accounts as I did with prop, and we definitely push people when I see that people are not responding to market behavior. I definitely push people. I call and push people to either define their risk for the trade that's eating away at their account, or to stop trading. It's not often that brokers will call clients, tell them to stop trading, but that's what we do. I just want to remind you that you're here for the long run, hopefully, and to be here for the long run, you really, really need to understand that you cannot have one trade take too much of your account. Define what that is and stick to it. Good luck.